Hi investors, and today we're diving deep into Third Point's Q1 2024 investor letter. But first, let's talk about why reading these letters is so valuable. Fund manager letters are like a backstage pass to the minds of top investors. They offer insights into market trends, investment strategies, and economic outlooks that can help shape our own investing approach. Plus, they're usually free. So let's unpack these letters and see what we can learn from Daniel Loeb and his team at Third Point as 15 billion assets managers. Third Point had a solid start to 2024 with their flagship offshore fund returning 7.8% in the first quarter. Not too shabby. Their top winners were some familiar names: Meta Platforms, Vistra Corporation, Amazon, Bath & Body Works, and Microsoft. Fun fact, Bath & Body Works made the top 5. Who knew scented candles could be such a hot investment? The letter also mentions their top losers, including Pacific Gas and Electric and DuPont. It's always interesting to see what didn't work out, even the pros make mistakes. Market insights. Third Point letter highlights 3 key factors they're watching. First, rates and inflation. They believe we're no longer in an inflationary economy. Good news for our wallets. Second, economic growth. They're in the soft landing camp, expecting some weakness in labor, but nothing too dramatic. Third, AI and energy transition. This is the big one, folks. AI is transforming in industries, and the energy transition is reshaping the power sector. They said, just as during COVID, when everyone became an expert in virology, today you would be hard-pressed to find an investor who does not have a complex view on macro. This quote highlights how economic factors are front and center in investors' minds right now. Now let's talk about one of Third Point's interesting picks, Vistra. It's one of the largest independent power producers in the United States. Here's why they like it. First, smart capital allocation. Vistra's been buying back shares and making strategic acquisitions. That is important. Second, nuclear assets. They bought Energy Harbor's nuclear plants at just the right time. Third, renewable energy trends. Ironically, most solar and wind power is making Vistra's gas plants more valuable for grid stability. 4. AI and data centers. These energy-hungry technologies are driving up electricity demand. And here they have a notable quote. Counterintuitively, electricity generated by gas in Texas has grown 30% since 2016, despite a 20-fold increase in solar and a 3-fold increase in wind. This quote underscores the complex dynamics in the energy sector and why Third Point sees value in Vistra. 4. AI investments. Third Point is betting big on AI. They invested in London Stock Exchange Group. They see this company benefiting from increased data consumption driven by AI. Notable quote here, we expect far greater consumption of LSEG data and Gen AI democratized data interrogation. Second, Alphabet, Google. Despite concern about AI disrupting search, Third Point believes Google's distribution and technology advantage will help it thrive. We envision the eventually of a world of greatly reduced content creation costs and the proliferation of information, a lot of it in the form of ad-supported content full of AI fakes. Against that backdrop, Google search will be increasingly important as a source of truth. Third, TSMC. As the toll road of the semiconductor industry, TSMC is set to benefit from the AI boom. We view TSMC as the toll road of the semiconductor industry, particularly for AI compute. And other notable investments of Third Point was Advanced Auto Parts for sure. Third Point sees potential in turning around this underperforming auto parts retailer. And they saying, at today's price, remaining company is valued well below $2 million per store versus O'Reilly and AutoZone that are closer to $10 million per store. This quote highlights the potential value Third Point sees in advanced after-parts company. Second, Pacific Gas and Electric. While it was one of their top losers this quarter, they didn't elaborate on their thesis. Maybe they're hoping for a spark of improvement. Sorry, couldn't resist the pun. Third Point seems cautiously optimistic about the market, and they are focusing on AI transformative potential, energy transition, data center growth, electric vehicle adoption. They're not trying to make short-term macro forecasts, but are positioning themselves for these long-term trends. They're saying, as the AI arms race commences, McKinsey estimates new data center build could drive an incremental 800 terawatt of global electricity demand by 2030, with 30% of this driven by generative AI. This quote underscores the massive impact AI is expected to have on various sectors, including energy demand. And the importance of adaptability. One theme that emerged from the letter is the importance of adaptability in investing. Third Point is looking at how traditional companies are adapting to new technologies and market conditions. They say, unlike in past periods of technological paradigm shifts, this new technology favors incumbents who are deploying their financials and intellectual war chest to win the AI arms race. This insight suggests that even established companies can be good investment if they are adapting well to technological chances. The role of geopolitics. While not a major focus, the letter touches on geopolitical concerns, particularly regarding TSMC and global semiconductor supply. While we comment Intel's efforts to diversify the global semiconductor supply chain and have admiration for the company's rich IP and manufacturing expertise, we think it will be difficult for Intel to challenge TSMC's dominance in foundry. This quote highlights the complex interplay between geopolitics, technology, and investment decisions. So what can we take away from this letter? AI is reshaping industries and creating investment opportunities across various sectors. Second, the energy sector is evolving with both challenges and opportunities in traditional and renewable energy. Even in a changing market, there is still value in old economy stocks if you know where to look. Third Point is balancing tech investments with more traditional value plays. Adaptability is key for both companies and investors. Long-term trends like AI and energy transitions are shaping Third Point's investment strategy. Remember, while it's great to learn from top investors like Daniel Loeb, always do your own research and consider your personal financial situation before making investment decisions. And the final quotes here. We believe TSMC has significant untapped pricing power, which can be levered to offset, if not expand, its already admirable returns on capital. This final quote encapsulates Third Point's approach, finding companies with strong market positions and potential for growth, even in rapidly changing industries. Thank you for watching. If you found this helpful, don't forget to like and subscribe, and let us know in the comments what do you think about Third Point's AI-focused strategy. Do you agree with their market outlook? And see you in the next video. And I'm, as a portfolio manager from Titans Capital, who outperform S&P 500, also recommend to see and watch my next videos and the results and shorts also, because we are beating S&P 500. Thank you.